Hey, here we are for the Beach Life Group First Quarter Roundtable 2023. It's been an interesting beginning to the year, especially based on what we were seeing last summer. The market was kind of changing a little bit last summer because of interest rates. So I'll go through some numbers, but let's just start off initially. What are you seeing in the market when you're working with buyers, Chris?
So buyers this year it's not quite last year. So last year, this time, what do we say, in April right now? This is when it got crazy.
Right.
It was, start on Thursday, home would come on Friday, Saturday, Sunday, all the showings booked, fully booked. If there's any open houses, it was a madhouse in there.
Mm-hmm. Right.
This year, the first few months, it hasn't been quite like that, but I don't want to say it, but it's kind of starting to maybe trend that way a little bit.
Feels very much like that, doesn't it?
Yeah. I think it's definitely not as frenzied as it was, for sure. Like this time last year, it was nuts.
Yeah.
It was, it was get in the house the first day it comes on or else
you're done.
Yeah. Reviewing offers Monday, which is kind of happening in that, let's call it starter price point, 700 to 800.
I was going to say there's pockets. It's happening right now.
For sure. Like, so we're working with some clients and stuff and just seeing a few houses in those price range.
Right.
And it's, the last one we saw, it was a little bit underpriced, but still nothing too aggressive. I talked to the agent on a Saturday, popped on a Friday. He already had 6 offers in, expecting at least 4 more coming in. I think they were reviewing on that Sunday. And that was happening a little bit. Whereas sometimes in that next price point, let's go up to like San Alejo. We're seeing like that 1.4-ish price point in North County.
Right.
And it's same thing. We're seeing it's property to property, but saw it come on, called the agent. They had 1 offer in that same time frame, Friday, Saturday, and ended up going under contract. But I think they only got that maybe 1, maybe 2 offers. So it just varies. And then there's a few in Cardiff, actually, right where we're sitting right now, they started in that probably like 6, maybe 6+ price range.
Yeah.
And they've had
600?
600 mil.
6
and
mil.
now
Six mil.
Now they're literally sitting next to each other. Ocean views, lagoon views, beautiful, like really nice views. Been on for a long time in that 4.5 price point, 4.5 million now. So they've had significant price drops in that, in that super high end. So
there's interesting things going on for sure.
And just to piggyback on the buyers, and also talk about sellers too, but it also has been week to week. Like we've had clients this year, we've had clients close under list until now. Like we weren't seeing multiple offers, we were seeing 1 or 2.
Yep.
And like Chris said, now it's starting to pick up. Now it's starting to be more of that frenzy, but hopefully not as
well.
We're back.
In my mind, we're getting back to this supply and demand constraints, and when the supply really gets low, we'll talk about that in a second. It's a challenge for buyers because, especially if they're locked in with the loan and interest rates are, they've been moving around a little bit. So a month ago, rates were higher. Beginning of the year, they kind of got down to their lowest point, and now they've moved back up, but they're now dropping back down. So
it was kind of week to week.
Yeah,
that's what we saw. Like week to week interest rates, all of a sudden they go up. People don't go and look at houses over the weekend. Yep. They go down just a little bit, and it's a madhouse.
And there's also some pricing, some agents actually pricing things well under market. I know I've been showing some folks in around the $1 million range. And there was one that came up in Solana Beach, twin home, west of the 5, and it was priced at $990. And I do some research, obviously, before we go, and I'm like, this looks like it should be 1.2 at least. I don't see anything around it that's makes me think it's $990. And so when we showed up, there was like people lined out the door. I think when I called the guy later to find out, just to figure out what was going on, said, where are you at, 1.2 or whatever? He goes, oh yeah, we'll be at least 1.2. Well, I think it's 1.340 is the final number on that, which is, so there can be frenzies caused by pricing, initially pricing it well below market, because that's what that was. And so there's definitely buyers out there. There's demand out there. They are more price sensitive, like Chris said, I think.
And one thing, too, if it is priced well, it'll still get the showings. It'll still, people are still going to show up. There are those buyers out there, but as opposed to last year when it was priced well, where the last comp sold, it's going, well over the list price. Now it's kind of, a lot of the offers seem to be coming in at list price, maybe a little under, maybe a little over. Like the spread of where the offers are coming in to where the list price is, if it is priced correctly, is not as wide as it was before. Yeah. Dramatic.
Yeah. So, in my mind right now, you really need a pro on your side. Not to be a shameless pitch, but it's true. You need to understand when you say week to week, a lot of it is, you need to understand the inventory in that area and what's happening.
Well, especially like whether that pricing strategy is the best strategy. Pricing it low is not always the best thing. Because if somebody's in escrow $400,000 over list price, they're going to get squirrely. Like if they think at any point during that deal that they overpaid for it, they're going to back out.
There's a bigger chance for that for sure.
Yeah, 100%.
For sure. Yeah.
So yeah, definitely having a pro is a big deal, especially now with there's no inventory. If you're buying, you need somebody in your corner for sure because there's nothing to look at.
Right.
So
right, and we got to make our own inventory sometimes. Go out and seek it. I know I go to meetings where they're pitching properties before they come on the market. You got to understand what could be coming so you can get connected to it. It always helps to be familiar with the agents in the area you're going after too, from the buyer standpoint.
Yeah.
On the listing side, in my mind, if you're a home seller and you've been waiting, because I know I've talked to a few people that were thinking of selling right as COVID hit, and then they're like, I don't want to deal with it. And then they were like, well, why should I sell? It keeps jumping up 10, 20%. And so some of those folks circling back around with, and it's kind of more interesting conversations now. The ones that have a low locked in interest rate, a little more sticky. The ones that were going somewhere or they're older and they're like, hey, we're going to move down and we're cashing out. And those people are starting to get back on board. But I think we talked about this earlier with the interest rates. We're hovering right about 6. We were up over 7 at a point. What do you think the number is if we get to where will it open up some more inventory for those people that are locked in at 3.5% that want to move up, but they don't want to double leap, because interest rate's going to be 2 points higher than they have. Plus they're going in price, so it's like a double whammy. Where do you think that number is?
Like probably, who knows? It's a total guess. But just if you say a lot of people are locked in sub 3. A lot of people are locked in sub 3, like 2.75 rates from when they refied a few years ago.
Right.
That's a tougher sell. If you're kind of in that 3.5 to 4% range, it's a little bit easier to jump up to, let's say, a percentage, a 1%, so 5.5% range. Right. So that'll play a big part. I think once it does kind of come down to where people see it as a little more reasonable and can make that move up buyers, not necessarily the first-time home buyers because they don't have a place to sell as well. Right. But once the current home sellers move up home buyers and kind of that traditional, we've been here 8-10 years, it's time to move the family up to a bigger place. Once the interest rates kind of come down to a somewhat reasonable range, 5.5, let's say, I think it'll unlock some of that inventory as well. So, it will cause more buyers too, because then they're going to, then they're out of the field too. That was my next question, because there is going to be there's still going to be a supply and demand issue.
Home sellers in general right now, depending on the zip code and price range, exact location, many of them are back in their driver's seat. To a large degree, like we mentioned just when we talked the buyer side. So what are you seeing on that?
Just like we've talked about, it's changing. So we've had a few listings this year that, coming into the beginning of the year, sat for 20 days, 30 days.
Oh my God.
I know, it's crazy. I know. We haven't seen it in years. But
getting itchy. We're like,
I know.
What do we do?
But, so it's gone up. Part of it, the market time has actually gone up over this time period from 17 days-ish to 36 in some places, 42. But so it seems like this huge leap.
Yeah.
We're talking another week or two.
Right. I know. We're like 5 years ago, 45 days wasn't crazy. Like
well, I can remember when it was
a lot more than that. Even
3 to 6 months.
Yeah, right, exactly.
And we would be talking to people at the door and go, when are you planning on moving? And they would tell you, well, did you want to be sold or did you want to be moved by then?
Yeah.
I mean, did you want to go on the market then or did you want to be moved by then? Because it could take 3 to 6 months in this market to get your home sold.
now it's 2 to 3 weeks. Max.
Yeah.
But yeah, so at the beginning of the year it was kind of slow, and interest rates were close to 7, and so and we did see, like, as soon as interest rates dipped below 7 or whatever they were, just lowered a little bit, all of a sudden those listings went into escrow instantly.
Yeah. Right.
And then in the last month we had another listing in San Marcos that we got 3 or 4 offers right off the bat first weekend, and we're in escrow on Monday. So
Sure.
The competition was definitely out there, and good strong offers at list or above. So there's opportunity, and we listed pretty much right at market. So we didn't want that frenzied, 50 offers. We were looking for good, solid offers.
The problem really is when you get 50 offers, I don't know, 38 of them are worthless.
Yeah.
They're flippers trying to get it for cash and talk you into selling it yourself when you sell it to them, and playing all these games.
Yeah.
You probably only respond to 5 or 6 anyway.
Right. Exactly.
So,
So we got our 3 or 4, and it was obvious that we were kind of heading back in the direction that we were in last year at this time.
Yeah.
Not the crazy frenzy, but enough, like all the showings filled up, all that too. So it was good.
Right. I mean, that's what I had a really nice place in South Oceanside that we got an appropriate amount of offers, and it went for, just way more than what Zillow said, but it was a solid price. So let's go through some of the zip codes now, or not zip codes. Talk San Diego. I'll read out some numbers just so folks know where the market is. San Diego detached homes for the first, as of the end of March, these numbers are 940,500, and that's down 4.2% versus last year at the same time. Attached homes in San Diego, 635, down 1.6%. When we look at coastal North County, which is a lot of what we're doing, the median price for a detached home, 1,980, and that was up 10% versus last year, which is pretty strong time frame as we're talking about. And then the attached were at 810, and they were up also. Median price was up 1.9%. So here's the interesting thing that we're seeing that we talked about: supply demand. It's getting funky again.
Yep.
So what I mean by that is we were in November. Actually, the peak was probably in the summer last year of inventory levels. We went from half a month supply in some places up to 2 months supply. So a huge percentage gain, but still low in the numbers. So right now, month supply of inventory for detached homes, San Diego, 1.1 month supply, not a ton of supply. 1.5 months. We always have a little more inventory in the higher price brackets. And then condos, listen to this, attached, 1 month supply in San Diego as a whole, and 0.6 month supply in North County for attached homes.
Yeah.
0.6.
Condos inventory is low.
Yeah. So I'm bringing you around to this too, to think about, hey, if you're a condo owner, that was your first house and you're thinking of moving up, this could be a good opportunity for you, because you might get a little higher price than you think. And maybe the interest rate is higher than you want to pay, or the leap could be higher. But think about this: if you're going from an attached to a detached, you're going to get a break on your rate, because the rates are a little bit lower. And then maybe you get a seller to buy some points. We've done that this year. And I've had a few of them where they paid significant, 2-3 points to get the person into an interest rate that makes the leap.
And your timing right now could be good. If you're getting on the market in the next 2 or 3 weeks.
Yep.
As a condo owner, you could have a big buyer pool because interest rates are dropping a little bit.
Right.
And then who knows, by the time you're ready to buy that next spot,
Yep.
they could be down even a little bit more. So
yeah, and you're, like we've done when the market was crazy, we've got rent backs. Actually, the deals I've done this year, there's rent backs involved in a lot of them. So there's a lot of opportunity in that realm, I would say, the move-up buyer. And the other thing to think about if you've been thinking of selling your home but you don't want to make that leap, a lot of the lenders I'm talking to are saying rates are going to be lower next year. So you may get locked into a rate that you're going to refi a year from now at a much better rate. Some of them are even saying by the summertime we could see 5.5%.
I would always still caution, get into something you're comfortable with now.
Oh, totally.
Because you can make predictions. I remember when I was looking at kind of doing this move up sell and talking to our lender, and
right.
Their prediction it was probably maybe somewhere in 2021, so before the interest rates kind of went up, and their prediction was like, yeah, even, and we were kind of talking like a year out,
Right.
And the just general, lender, kind of what they were thinking was, rates should be about the same. It was probably about 4% at the time.
Right.
So planning ahead is kind of hard, but by the time, go out to that year, then we're sitting at, 6.5%, 7%. So it's kind of hard to, prediction wise, what's going to happen. I wouldn't base your current, where you're going and your current move, all that stuff on what might happen. I'd kind of focus on what's happening right now.
Right.
Get in comfortably. And, if things do work out in your favor, great. But if things got worse in some capacity, then you're still comfortable with where you were. So,
yeah. I mean, there's a level you definitely got a line you got to pay. You can't ever jump in over your head.
Yeah.
Especially the market is dynamic right now. I think I've been saying that for the past couple of years. It's been really dynamic, and it's changing. Like we discussed, it's changing all the time. So anyway, what else are you seeing as far as what do you think? So we're in April. What do you think the next quarter brings? We won't jump too far ahead. I'm not going to say what's the end of the year, but what do you think the next quarter brings?
I mean, it has to be a little bit more inventory. I mean, it can't be lower than it is now. So I guess we've been saying that for 2 years. But
last year,
well, in the condo market, we're at 0.6 months supply again.
Yeah.
Holy smokes.
Yeah. I mean, I think that's the hope is that there'll be more inventory. And I mean, that'd be good for a lot of our clients who are looking, and there's just nothing to see. It would be great to go back to showing 3 or 4 houses to a client rather than one on one weekend, maybe 1-2 weeks later.
For sure.
Just, because as a buyer, it's disheartening.
Yeah.
There's just nothing to see. That's what I'm hoping for.
I mean, they are going to get the right house if they're serious about buying, because we stay after it. I know I had one that missed on several different houses, and now they actually just recently closed on the house, and they're like, well, we're glad we didn't get the other one. I mean, they literally are, and they did end up in a great situation, but there's some frustration times for sure during that. So what do you think, Chris, next quarter?
Next quarter. So just back to the inventory real quick, I've seen recently like not a good number, but like a decent amount of homes coming on the market that were sold in 2020, 2021, where people did get in there and they're like, nah, this isn't going to work out. So we see more of that come up, and, I mean, obviously then they're buyers, but, it's all as a whole. You get one more house on and then one more person out there. I think a lot of the buyers from this year are a lot of people who went on the sidelines when the rates did get to 7%. For the last half of last year, summer till December, it was slow out there. There wasn't a lot going on unless you were super motivated. You needed to move. You had to do it. So I think a lot of them piled up into right now, kind of wait until, the typical buying season, which we're in right now, kind of going into spring and summer. Once they all kind of get settled away, then it comes down to, okay, where's the economy as a whole? That's going to play a big part. And interest rates maybe they will be down, but where are people with their jobs? Where is there a bunch of uncertainty in other parts? Is there a recession coming? So it's kind of like a lot of other moving parts that even, focus on yourself and what you can control. Like, you
can't control anything virtually. But yeah, no, you're right. I totally get your point. It has to be comfortable in the end, and it also has to make sense financially. Otherwise, but I would say this. I sat in with the lender yesterday, and I said, so what do you see happening? And he went through, well, we think the core CPI is going to be a little stronger than, he gave what happened today.
Yeah.
So, but we think it'll, depends on how the market views it, but we think rates should get a little better. And maybe they will. But then he reeled through like 8 different things, China, Russia, bond market, all these different things, the Fed. And there are a lot of things. So you got to focus on what's important to you and what you can control and what, but having said all that too, you need to, so here, what's my alternative? This is what I'm looking at. What's the alternative? What's 5 years bring? What's 10 years bring down the road? Most of the time, if you're buying real estate in San Diego, 5 years down the road, you're happy. 10 years down the road, you're really happy. 20 years down the road, you're extremely happy.
Yeah.
It's a good way to build wealth over time. But, it's going to be an interesting quarter. I think if we see inventories go up, the only way that's going to happen is by more move up, that segment of the market, the move ups going, and then the people that have been holding off for a few years with COVID, maybe much older people that they just say, hey, we're going to sell. Because even back then, remember this, I don't know whether you're not old enough to deal with this, but I have clients that their parents pass away, they have a property, and they're like, yeah, I don't think we're going to sell it. I think we're just going to rent it. I have a number of those. And so, maybe some of that will change too, where people reallocate funds. But anyway, that's the first quarter. One last thing that I'll bring up that I think we saw a bump in our upper end market was because of what went on in LA. The LA County put in this mansion tax. And so I think we've seen kind of a number of different people come from LA and buy some properties down here that were not wanting to participate in that. So anyway, that's the first quarter of 2023 from the Beach Life Group. We'll have more coming. If you want reports, we've got them. Click the links. There'll be some links below if you want to keep up on what's going on with the market. And all of our numbers will be below too. So parting words?
Adios.
It's next month you could say that on
it's
the
a good
5th.
one. Okay, yeah, I gotta wait.
Okay, you're early. What do you got, Chris?
Yeah, no, just it'd be interesting. Just stay up on the market.
Yep.
Follow our channels because that's what we do every day.
We're all over the place. You guys are shooting videos almost every day. We're shooting videos. We're putting out information. So if you want to know what's going on in the market in North San Diego County Coastal, we'd like to be your guys. We'd like to interview for the job. But anyway, that's it from here at Compass headquarters in beautiful downtown Cardiff by the Sea.